Hi everyone, this is Kel, and this is going to be a mind-blowing event because now massive foreign funds are exiting China and Hong Kong right now, causing the stock market to be coming down, and people around me are asking me what's happening. Now, I did some research and I realized that, right, there's something very interesting about Moody's recent downgrade on China and Hong Kong. And it seems that, right, maybe Warren Buffett or Berkshire Hathaway has a little part in this. Let me tell you more in detail. Let's go. Right, before that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, we know the big move by Moody's recently, right? Moody's came in and downgraded across the board on China, all right? And of course, that spoke a lot of investors' fear because they noticed that, Moody's did it for US recently, and now they do it for China. But of course, US had no much, nothing happened to them. It seems that it doesn't really bother, but China itself is having a lot of issue. And because of that, right, the CSI 300 index has hit 4-year low. And of course, the index itself lost 12% year to date. Now, to compare this to the US Dow Jones, which is like near to all-time high, this is really very interesting. Of course, there are some people saying that could it be a propaganda between the two countries? Well, there's a possibility of that. But more important thing is that we all know that China has been hit by the property market, Evergrande and the New Century, right? So all these big time property companies are not able to continue business in a way. And of course, what will happen, the repercussion, as I've been mentioning to you guys, it will be the banks will suffer. And once the banks suffer, there will be a spillover of tightening process across the board, and people will not be able to borrow money from the bank, and then things will get out of hand. And to me, it's all right. This could really means more selling is coming in. And of course, you can see right now, they not only cut the China's economic outlook, they also went in heavier to aid China bank on potential credit quality decline. Oh my goodness. And they also downgraded Hong Kong at the same time. Now, this is terrible because by doing that is really telling people that just get out of China and Hong Kong right now. Don't invest in that two country. And of course, if you do that, that will definitely be a big issue because there are downgrades of really big companies like ICBC, Agricultural Bank of China, then the Bank of China itself, the main one, and China Construction Bank Corporation. Now, all these are very big banks. So for Moody's to do this cutting of it itself, right? Of course, the Chinese officials are kind of like disappointed, upset. But the thing is the reaction is no joke, all right? So we saw the China consumer price has fallen for the fastest time in 3 years, and Hong Kong shares really coming down because China offers no fresh stimulus, okay? Nothing new, because they probably know that even if they do it right now, it will give the foreigners, the foreign banks or foreign institutions a chance to get out of the market. Yes, because whatever they do right now, it will not save the economy. It will just basically make the stock market go up a few days later and then it come back again, because we've seen this many times over the last 2 years. And of course, with this ongoing, you can see right now the Hong Kong stocks retreated because of the lack of fresh stimulus. And we have many companies coming down, and you can see that the long-term trend since 1990 has been a very strong trend, and it seems they're going to retest this trend. And of course, there is a probability that we can see 16,000 traded. So the thing is this, because there's no new measures to revive the ailing housing market. We all know that it's not possible. And excuse me. And Hang Seng Index has lost 4.6% in December alone. Now, this is really no joke because, right, the preceding 4 months, it's been down too, all right? So all this tells me that, right, it looks very interesting. Why is US at a high and China at low end? So of course, let's look into Moody's background a little bit. Now, very interesting, in Moody's background, their top investor is Berkshire Hathaway. This is incredible, 13.48%. Vanguard Group is one of the top ETF, all right, top these fund managers, they have 7.64%, and BlackRock, also one of the top investment company, is 7.49%. So the thing is this, why am I looking at this? Because we all know that Warren Buffett himself has been a pro-America guy. He's been doing a lot of buying of Apple shares and stuff like that, all this thing. So from 2016, we all know that Donald Trump comes in, he really stamped his authority against China, all the trade wars and stuff like that. He started it, and now we all know that Biden is not happy with Xi Jinping. So probably now something in my line of that leads to this Moody's thing. I don't know. I just basically speaking as form of speculation, all right? So we can see now Vanguard has decided to close its Shanghai office and continue to monitor the movement. All right, and of course, BlackRock has denied media reporting that they're going to withdraw from the Chinese market. But obviously, when the media report this, we all know that it's just a matter of time. So take a look. Okay, Berkshire definitely is not there. Then Vanguard is leaving, and BlackRock is seemingly leaving. So all these speak for itself. Probably that's the reason why they can do this right now. And of course, the thing is this: you can see now foreign funds are leaving. All right, 160 billion of earnings are out of the country last 18 months. Foreign funds move out billions in earnings. The foreign investment in China turns negative for the first time, all right, as global funds dump another $3 billion. All right, so basically, they're all getting up. They are really not going to stay there. And as a CNN report says that China hasn't been this scary for investors in 25 years. Now, this is really no joke because people, capital are moving out from China. So if they are doing this, what will happen to the stock market? Or this is going to be a big one. Because with these foreign funds basically coming off from retreating from China, definitely it won't end good for the indexes. And I'll tell you more about that. You can see right now, China is seeing big capital outflow while the rest of the emerging markets are getting inflow. So the funds from China is moving to the emerging markets. So that is one thing why certain countries are holding it right now, like Japan. But the thing is this: if China really enter recession, I cannot imagine what will happen. And of course, even we skip this recession part, let's say US now is at all-time high level, near to all-time high. And what if we hit all-time high and then pull back, which is typical? So if the US has to come down itself, right, what would be the effect on China, on Hong Kong? I believe that will give a very strong sell signal on this two market, because if the big brother US get into some trouble or some profit taking, so obviously like China and Hong Kong, they will definitely get the hit, right? So with that, it is very clear that we may see a further downside for Hong Kong market. So now we have this very clear support at 16,200, so 16,000 level. This is a very important 16,000 level that the market will be taking notice. And I believe that the market will most likely break below it. Okay, like typical thing, they'll break it down. And of course, the downside will be next one is 15,400 series. Now, I think about 15,400 will be a very, very good time to buy. But even though the indicators are near the bottom, I believe that this shows that this is a downside movement, means same identical low, but the price is lower, and this is usually a negativity in the market. So I believe that there could be some selling. Now about 15,400, that time we'll basically cover this entire this upside back then in November in 2022. So I think this is where the baseline will be. Then of course, if things get scarier, it may even break below this low, which is really cannot be imagined. So let's look at it at 15,400 to be next base for 16,000 should be the level that the market will break later this week. All right, so that is for Hong Kong. All right, there's a lot of Hong Kong trader with us. And of course, the next one will be China. China Shanghai Stock Index. Now you can see that it's very, very clear that it couldn't stay up for the last few months. So the thing is this: even though the RSI has came down, there were intermittent rebound. Like you can see this is what happened to the Chinese funds. They came in, but on a very single day, the same day itself, the boys sell it off. You can see that the market hit the moving average, and then after that, it just sell all the way down. So of course, that's why the market leads to another wave. So recently, the China market recovered. Yeah, there's a bit, but now it's coming back down. And I believe that the next target itself should be able to see 2,900 to be broken. Now, once this is done, I'm quite sure there'll be a lot of panic in the market. Now, of course, some people say that maybe it's time to buy. I'll say no, please don't do that, because I believe that this problem in China hasn't really started yet, in my opinion. Although there's issue right now, but the repercussion, the exploding factor, I think is still far away. So let's see whether I'm right around the next 2-3 weeks. So like I say again, both indexes are near the bottom. So I'm not half surprised to see a bit of rebound, but still, I believe that the two numbers I gave for the market, which is China, this Hang Seng to break below 16,000 and then maybe travel to 15,004. And for China stock index itself, right, it is possible for it to travel down to below 2,900. I think that should be the way. All right, guys. So hope you like and subscribe and share my video. This is Kel signing off. Take care. Have a great day. Bye-bye.